Good afternoon. My name is Alicia Ogawa. I'm with the Center on Japanese Economy and Business. I want to thank you all for coming this afternoon, and I am quite confident that you will be amply rewarded for staying through this very, very interesting but very long conference today. You'll be amply rewarded when you get to hear the discussion that I'm about to introduce. We have an incredible panel of very busy, very important people, so busy that one of my panelists just asked me what it is I expect him to speak about. So I'm going to talk for a few minutes to give him time to collect his thoughts. This conference has become an annual event, as many of you know. And over the past years, the list of topics from which we can choose to focus, particularly at the micro level, has become longer and more exciting and more crucial, thanks to Prime Minister Abe's ambitious agenda to revitalize the Japanese economy and the Japanese society. Part of the Prime Minister's agenda and part of Bank of Japan Governor Kuroda's agenda involves portfolio rebalancing. And when we talk about this at the micro level, what this really means is some encouragement to the private sector to become more creative, more global, more interested in taking risk. And that is what this panel of experienced and very opinionated people is here to discuss. But again, in order to give one of my panelists time to collect his thoughts, I want to take a minute to put this topic into context. I first moved to Tokyo in the mid-'80s when the economic bubble was just gaining momentum. And at that time, I can see a lot of people in this audience who remember that time, the banks were all powerful. And the financial markets and the economy in general was not exactly a monolith, but they were all very tightly involved in this ball with the banks in control at the center. So this created stability, but certainly at the cost of what stability always involves, a loss of innovation, change, creativity, and risk-takings. Of course, the onset of deflation explains a lot about why the Japanese private sector has avoided taking risk. But even thinking back to my first years in Japan in the 80s, one of my oldest friends in the regulatory side, Mr. Mori Nobuchika, we used to have long discussions about why there was such a small capital markets in Japan, why it remained so undeveloped, why there was not the creation of an asset-backed securities market or structured finance market or a mortgage-backed securities market, why the capital markets remain so small and undeveloped relative to the size of the economy, relative to the size of the banking sector. Well, since the private sector did not seize on the opportunities to create a more efficient dynamic market, the Japanese bureaucrats, being very hardworking and very creative, tried to take the lead in kind of jump-starting financial and corporate models that would lead to a more dynamic economy. So I'm going to ask my friend to show the first slide here. Here are some examples of government incentives that were introduced to try to fill the vacuum that the private sector, for whatever reason, refused to fill. So the first, many people, not many people, are old enough here to remember the Kaitori Kiko, which was organized or encouraged by the Ministry of Finance because the private sector didn't emerge as a buyer of non-performing loans, of distressed assets. Another example, Japan Housing Finance, particularly before the Koizumi reform of that organization, was originally asked to create the asset-backed securities market, specifically mortgage-backed securities. But again, the private sector never jumped in to seize that opportunity that was being created by the inception of this market. Many people here will remember the IRCJ, which was formed to create a turnaround market when one did not naturally emerge after the aftershocks of the collapse of the bubble. And finally, I've listed a couple of various government-created investment funds that have been set up to try to encourage a venture capital industry, a regional investment fund industry, and so on. We have many other examples you can think of. I would point to recently the creation of the new stock index, the Topics 400, which is, I suppose, in one way, it's an attempt to kickstart a shareholder activist movement, which, again, the private sector alone has not been able to create. So why has the private sector not stepped up to take the opportunities to take risk and to earn a high return? Back to something that Paul Sheard said in the previous panel, the Bank of Japan is to be applauded for being one of the first central banks in the world to focus on buying assets. However, wouldn't it have been nice if there had been a wider, deeper asset pool for the Bank of Japan to buy from? I mean, in the United States, obviously, the mortgage-backed securities market has been a focus of the Fed purchases. But again, in Japan, the range of assets beyond stock, Japanese government bonds, and bank loans is fairly tiny. So that's what we are here to discuss. There are many possible explanations for why the private sector has been so slow to take on a risk. The first and the most powerful explanation of the last 20 years is, of course, deflation, which destroys the risk-return equation. But I have some other possible explanations I want to throw up. I don't want to throw up. I want to put in point of view for, I don't feel that strongly about them, but some of the other possible explanations can be tax codes, inheritance tax, corporate tax, transaction taxes, weak corporate governance, which I hope Mr. Shiozaki may speak to, because obviously weak corporate governance means there is no pressure on managements to take risk or to reform, which is in itself a risk. The power of the banks, I maybe should not, I don't feel I want to comment on whether that has changed in the, since the time that I first came here. Maybe it's more accurate to say the power of the banks has become more diverse. They're involved in many other businesses. Some people say to me, well, the reason we don't take risk is the educational system. Our teachers don't teach Japanese students to question authority and challenge and think for themselves. I am not entitled to an opinion on that, but I just list it as one of the explanations that is often offered to me. Compensation schemes, it's often pointed out that, for example, Japanese fund managers are not typically paid according to performance of their investments, or if they are, the bonus is very tiny. It's not really a central incentive. And finally, the social safety net. It's very difficult, I think, for big Japanese companies to aggressively restructure when they have to bear the social criticism of putting people out of work when social safety net is perhaps doesn't imply that that's a very easy transition to move from one company to another. So I want to stop my comments here. I hope that everyone on my panel has had enough time to gather their thoughts. I'm not going to waste time going valuable time. I want you to hear what these people have to say. So I'm not going to go over their biographies. Besides, look at these people here. For me to go over their achievements, I'd have to keep you here until midnight. So I'm just going to simply introduce them. Mr. Shibata, who will speak first, is presently the president and the CEO of Nikko Asset Management. And I think that he's going to speak to this topic from the point of view of his long, extensive experience in the financial industry. Our next speaker, the Honorable Mr. Shiozaki, is, as most of you will know, is one of the leading and most knowledgeable reformers in the LDP on the subject of financial markets reform, and specifically on corporate governance. Mr. Tamaki, the third speaker, is now a university professor, but he will be speaking from the viewpoint of his previous position at the Government Pension Investment Fund, GPIF. And finally, Mr. Yamamoto is one of the leading practitioners in Japan in the private equity industry. So I am going to look forward to a spirited discussion, and I will ask Mr. Shibata to speak first. You are welcome to come up here. You are welcome to remain seated, whatever feels more comfortable to you.
So thank you, Alicia. And it's a great pleasure to be able to speak on this occasion. I enjoy the presentation by the governors and experts on the monetary policies. And also, I also enjoy discussions on very important structural issues that Japan faces. Simple conclusion of earlier session is that we are poised to have at least 2% inflation. And therefore, we need to change the asset allocation of the nation so that the nation can benefit from a newly found inflationary environment. When you ask the question as to the reason why Japan has lost its animal spirit over the past few decades, certainly deflation has been one of the major causes. At the same time, we need to learn from the success of area around the Stanford universities, a great ecosystem of U.S. venture capitalists, animal spirit, discovery of new business models, discovery of innovations, and the spirit to launch product on a global basis from day one. What is missing in Japan could be summarized into 3 areas of challenges, and therefore 3 areas of solutions. Number 1, demand for risk money. Why is it that there aren't many startups? And this you can ask in a formal question to youngsters: why aren't you not seeking to establish a new businesses? The reason is very simple. There is a structural impediment. In this country, when somebody runs a corporation, borrows money from commercial banks, the person needs to give a personal guarantee. So it's not non-recourse. At the same time, when they go to the venture capitalists and seek risk money, you'll be very surprised that they are asked to write a put option so that when things don't really go very well, venture capitalists will tell them to buy back the shares at the original price. This is, again, equal to personal guarantee. Whereas in the Silicon Valley, when they accept investment from venture capitalists, there isn't any personal guarantee. So venture capitalists would certainly require higher return, but at the same time, they don't mind losing their shares. It's their business. It's a probability game. And when they go out of business, youngsters would basically sort of pack up and move over to the other place and shoot for another opportunity. Here in this country, people's life would be destroyed forever once they try and fail, unless they come out very lucky. So the suggestion basically is to have a new way of making investment as a venture capitalist, like the players in Silicon Valley, and also introduce new ways of lending money to corporations on non-recourse basis. And naturally, because it is non-recourse lending, spread will be higher, but it's a job of banks to check the credit and also demand return in line with the credit. One of the key problems that the Japanese commercial banks face now is that there is a sort of race to the bottom as to the lending interest rate. Why? Real asset is put as collateral, and if a real asset doesn't really cover the future in a loss situation, personal life is also put in mortgage. Naturally, commercial banks are taking less risk, and therefore they should be taking less spread. So if venture capitalists and commercial banks were to change the pattern of behavior, it could well be a case for win-win situation. Commercial banks would make more money, and the startup players have a less worry about the personal future. So first one is about the demand side, and we need to have a system to encourage people to take risks. Second area of constraint is supply of risk money. When you take a look at GIC of Singapore, when you take a look at Temasek of Singapore, when you take a look at CalPERS of United States, when you take a look at Ontario teachers, they all take risks, expecting to make a high return over long term. And part of the portfolio would include investment in infrastructure. Part of the portfolio would include investment in venture capitalists or private equity firms. Look at GPIF. They don't invest in venture capitals. They don't invest in private equities yet. They don't invest in infrastructure yet. What is the reason? GPIF is 5 times larger than CalPERS. So it should be able to do anything that is CalPERS doing in a scale that is 5 times larger. We will be wrong in criticizing GPIF. We should be right in criticizing the institutional setup of Japanese pension. Japanese pension is not funded pension. It's pay as you go. And by the way, if there's excess money, that could be managed. But at the same time, in the past, especially during the days in which there was a strong political fight between LDP and Socialist Party, if you remember them, when stock market goes down, LDP members of the cabinet would become very busy answering questions. So net result of this was that they decided, all right, we'll make it autopilot. Okay. GPIF reports to the Minister of Welfare, and Minister of Welfare basically endorses a sort of set of portfolio allocation that is very widely distributed portfolio of Japanese equities and foreign equities, and the Japanese fixed income and foreign fixed income, 4 classes of assets. Why do they do that? Just to avoid having a hustle of answering politically motivated attacks. The solution was found in Canada when there was a bipartisan agreement to fix a pension system. Both the conservative people and labor people were getting tired of answering questions when they were in power and when the stock market is down. So make it bipartisan, and also define the purpose of GPIF. Define the purpose of GPIF as a fund management institution. Give them a proper corporate governance structure and target, and also ability to employ top-class individuals. those top-class individuals will be able to quickly produce a proposed asset allocation based on the diversification risk profile, and that is essentially to benefit all of the beneficiaries of Japanese pension fund. And a little portion of that could be invested in venture capital, could be invested in private equity and infrastructure. Japan has an asset in GPIF, which is 5 times larger than CalPERS, and it is not to the benefit of anybody to restrict GPIF from what it should be doing. Second source of money is essentially Japanese private wealth money. Japan GDP, maybe third largest economy now, but the personal financial asset is 3 times as large as Japanese GDP. And 50% of that is sitting in bank deposit that nobody would really want to use. It's a short-term money. Japan should have a mechanism to encourage people to invest long-term, and lesson could be learned from the success of the Australian superannuation fund. It's a privatized pension system, and they are going to increase the amount of mandatory contribution to 12% of one's annual income. And net result of this is that the size of the investment trust market in Australia, a nation of 21 million people, is much larger than the size of the investment trust market for 120 million people. It takes great effort to underperform the nation of 21 million when you have 120 million. And the answer lies in Japanese 401k. I retired from one company, and I decided to collect my check. I invested about $6,000 and collected $10,000, and it doesn't cut a cake. Okay? System is there. The only thing that the government should do is to allow people to invest more. And that will basically lessen the cost of safety net. And also we can talk a little bit about this foreign currency reserve and look at what GIC is doing. Okay? Chairman, chief executive of GIC would be very busy visiting various places, including Singapore, because they need to answer questions from one of the major shareholders, GIC, and by the way, they do business in Singapore. Do you find any chief executive or major corporations around the world who would visit Tokyo to speak to Bank of Japan or GPIF? It's very difficult to accumulate money. Japan has 3 tigers, if you will: pension, personal financial assets, foreign currency reserve. Those are 3 tigers that are kept in cage. But the basic question is, what is that cage for? So these are sort of my comments about the need to change the demand and supply mechanism for private sector risk-taking and also provision money. And third one would be found in the remarks from Mr. Shiozaki, discipline. Thank you.
Good afternoon, ladies and gentlemen. My name is Yasuo Shiozaki, a member of the House of Representatives. I'm very honored to be on the panel with the good friend Alicia for many years. Not too many, because she's young. But I didn't really look at the title of the panel until today. And a little bit astonished that it's not capital market itself, but more wider talk. And looking at the occupation or role in the society of the panelists today, I think they're all from private sector, except for Tamaki-san used to work in the Bank of Japan, right? Which is my background also. But I think I am the only public figure on the panel, so I would talk about what we are going to do in the next week or so in LDP and a month or so in the government in terms of Abenomics, revision. And that would have a lot to do with the risk capital, because it is almost equal to saying how we can revitalize Japanese economy itself. And Shibata-san made a good presentation, and he touched upon animal spirit. And I think Abenomics, in the end, is nothing but how we can restore and recover so-called animal spirit, and also self-confidence. And also, well, on personal level, and also maybe corporate level, this is a 10 top companies in the United States, registered patent, number of registers, in terms of number of patents issued by the US. And you can easily tell that Japan is top. We have 4 companies, Japanese companies. That means these companies are very good at getting patents. That means technology-wise, we should have confidence. But somehow, if you look at, is there a pointer? I'm not sure. No. On the right-hand side, you see the ROE, and you can also easily tell that somehow Japanese companies are not running high ROE. So what does it mean? I think there must be something wrong with the mechanism for companies to make profits. And also at the same time, if you look at this productivity figure comparing US industries and Japanese industries, and you can tell 100 is the level of the United States, and we see so many industries way below US productivity level. And this really shows that we need more risk capital to make these companies more productive. And so Abenomics, and also we have to be proud of having good scientists like Nakayama Sensei of IPS cells, fairly young, and he received a Nobel Prize only 7 years after he found the iPS cells, I guess. And that's very exceptionally short period. That means he's very capable. But somehow, we have lots of Nobel Prize winners, but at the same time, there are lots of Japanese Nobel Prize winners not living in Japan, but moving into United States universities, maybe. And there must be something wrong with Japanese universities. So we are going through university governance reform also in Abenomics. But anyway, this is, well, the government announced their growth strategy last June last year. And prior to, well, 1 month prior to that, we combined our version of growth strategy in May, a month before the government decided their own growth strategy. And they took up many proposals from ours, and they didn't take up some. But in those items, there are very important things also. And I'm not going to explain all these, just the list of proposals, but because this is last year's list, and we are going to release next week our version of growth strategy revised this time. But we do have potentials, as the number of patents of Japanese companies showed in the United States. But there are many things that prevents Japanese companies and Japan to perform well. And we have to identify those items, what are the problems that hinders Japanese companies and Japanese people or Japan to perform well. And in the third chapter, there are the list of those that prevents companies or Japanese economy to perform well. One is, of course, regulation, and second is bank lending policy is not geared to work out or restructuring, but rather procrastinating all the problems. And too much intervention of governments, so we need more competition policy, and also corporate governance on the part of private sector, and also still we observe cross-shareholdings and also silent shareholders. Typical case is the Olympus, where lots of problems remains, but still major shareholders were so quiet. And PFI, PPP, that's another government or local government's too much intervention. And also GPIF, Chiba-san talked a lot about, and also Tamaki-san probably will talk about GPIF too. And so we'll all go through these reforms, and this year we are especially focusing on 1, corporate governance, 2, regional banks, realignment or recapitalizing or more risk capital in regional banks in order to go through workouts or zombie companies to either revive or exits. So what we are going to emphasize this time is, first of all, we already handed out the legislation of company law that requires, or we introduced comply or explain rule instead of a statutory rule in the United States or Korea, and European style comply or explain. But I would say it's literally a requirement for companies, because you have to explain if you don't have at least one or more independent directors at the shareholders meeting instead of just disclosure on the paper. And we did introduce the so-called stewardship code that would change the behavior of institutional investors. But you can see that we are lacking the corporate governance code. And FSA and we finally came to the conclusion today, I would say, that we will going to propose to introduce corporate governance code, and FSA is going to be the kind of a Secretary General Secretariat together with Tokyo Stock Exchange, and that would include many important elements of corporate governance, like more independent directors, or voice of shareholders, or cross-shareholdings, or stronger corporate governance of banks. And with regard to banks, you know, we had problem of Mizuho Bank this year, and FSA defined this problem as the governance issue, governance problem, and they are now advising banks, not just Mizuho Bank, but other banks too, to introduce independent directors. But we are asking FSA to introduce bank law amendment to require banks to have plural number of independent directors, because banks are kind of a mentor that would teach the corporate governance to the borrowers. But instead, many banks, listed banks, I would say, among them, there are many banks that have no independent directors. And so we are going to ask FSA to encourage banks to introduce independent directors more. And if not, we would ask FSA to change bank law requiring to have plural number of independent directors. And also we are asking, well, to the banks, I would say, to realign, if necessary, cross-border of prefectures, because ordinary companies are operating not just inside of a prefecture, but like regional banks, but cross-border. So we're asking banks to have better corporate governance, and probably that would bring about the realignment by collecting more risk capital on the side of banks in order to go through the necessary requirement by Abenomics, that is more restructuring and workouts of the problems, troubled companies or zombie companies. Otherwise, that low productivity of Japan would not be solved. So I would symbolically, using the word Japanese super regional bank should be encouraged, but not forced by FSA. But I think the new corporate governance should inevitably invite those situations where they would have more wider operation of banks, and also more stricter corporate governance, and ask borrowers to be more efficient and productive, and that would eventually bring stronger Japanese economy, I would say. Thank you.
Good afternoon, ladies and gentlemen. Well, it's my great pleasure to be here with two capacities, one of which is ex-GPIF guy. I finished my a little more than 30-year career in the public sector, working for the GPIF for 2 years until 2011. And the other capacity is a teacher at university in Tokyo, teaching. My students are primarily or completely students, women, because my university is a women's university. Established in 1908, a little more than 100-year-old history. And this school was established by a Japanese woman, probably who was born in mid-19th century. And the school's idea is to create a new breed of Japanese women with a practical skill to support herself through her life. Well, probably I should start with a few things about the GPIF. GPIF is, as everybody knows here, the world's largest pension fund investing in the market. And but one of the most, the important point is that it's a new institution. It was established in 2001. And since 2001, about probably a little more than 1 trillion yen of new cash was flowed into the GPIF every month until March 2009, when the fund size reached something like $1.45 trillion. Right? And until then, GPIF was very busy carrying out this huge transfer of funds from the public sector to the market. And after this job is done, GPIF had to deal with the aftershocks of the Lehman shock. And in the last few years, I think it has entered a new phase of the development of the institution. Now it has one very important role related to the topic for today's discussion, how to enhance its financial intermediation capability, and how to do it. GPIF has its basic portfolio consisting of about 60% for domestic bonds and 12% for domestic equity, blah, blah, blah. But these are conventional asset classes, and I think it has achieved some sophistication in allocating funds among the external fund managers, hiring them, selecting them rather rationally and efficiently, and monitoring them and sometimes firing them. Okay, I think my view is that GPIF has been done a fairly good job in this area. But the new phase is about expanding their scope of diversification, sometimes into something like private assets. I mean, not publicly traded, but private assets. It has already announced that it was this February that it's going to start investing in overseas infrastructure funds. Working together with the Japan Development Bank, as well as Ontario Municipal Employees Retirement System of Canada. I think this is a very positive and constructive development. And along this line of development, GPIF should continue their utmost effort. And the Japanese government, the society as a whole, should support just say momentum. Doing what? Not too much. GPIF has been doing this job with a little more than 70 people. With 70-something people, they manage $1.4 trillion while developing a new, say, financial intermediation technology or skill. We should provide a little more to them. a few dozens of, say, professional people, some of whom might be one of you. So this is, say, pretty efficient, say, piece of investment that Japan could do. On the other hand, the GPIF should not be used as a tool for short-term oriented intervention in asset market. It's not a piggy bank for short-term policy purposes. This is a fund coming, each yen, each penny of the GPIF has is pension money. This is very important point. This is very important. Every single yen that GPIF manages is pension money. And in this democracy, pension is a highly sensitive issue. And everybody believes that the government or the GPIF manages this money from the long-term point of view. So short-term policy purposes should be carefully, say, separated from the GPIF. Rather, GPIF should concentrate on long-term issues, such as making the financial intermediation system of Japan a little more efficient and sophisticated. That's one thing I want to talk today. The other thing I want to talk about is the students I teach. Okay, they are women. Okay, and as Mr. Posen pointed out today a few times, the college-educated women is a source of the future, say, growth of Japan's economy, and what they are like today. Okay. This is the issue I want to talk. We know that the labor participation ratio is M-shaped, right? And this M shape, this M, compared with, say, 20 years ago, it has gone up a little, pretty much, okay? But it's still an M shape, okay? We want to have, say, reverse U-shape curve, right? And how to realize this? Okay, there must be something to be done by the government or Mr. Shiozaki, but that's not enough. We have to look at women themselves. Okay. My students, they all have mother. Okay. They all have. And they see their mother, say, as a model of their life in the future. And my students are all very nice people, wonderful people. But I often ask them about their future, the idea of their future. And they are surprisingly, surprisingly M-shaped. They say, okay, Professor Tamaki, I want to get a job after graduating from the Ozuma University and work for a company, and I want to work as long as possible. How long? Until I have a baby. Okay, and this is what they say. And after that, I ask, okay, I want to come back to work after my children the school age, okay, probably to part-time job. That's exactly what their mother has been doing. Okay, what's my job? Okay, well, my job is to tell them that that model, which worked for their mothers, it will not work for them. Okay. To persuade them, I need a few numbers, one of which is 23%. This is the ratio of the Japanese women in their early 40s who have not married as of today. Okay. So I tell my students, okay, there are 4 of you. Okay. 1 of you will not get married at all. Okay. For 3 of you, okay, 1 of you will be divorced. For 2 of you, 1 of you will be de facto divorced. Okay. And so one of you will have a, say, nice husband, happy home. But, okay, look at this audience, but primarily male audience, okay? I ask you, how many of you, ladies and gentlemen, how many of you makes your wife happy? I don't want to elaborate on this issue anymore. I'm afraid I'm a little bit too political. But the issue is, for Japan to have highly educated women to contribute to the society, there are two things which have to change. One is social structure or employment system or something, other things that surround the Japanese women. And the other thing to be changed is Japanese women themselves. And what of the Japanese women should change? Is their, say, their idea of their future. And this is probably the hardest thing to do. But who should do it? Teachers. Okay? One of them will be mine. And I really enjoy this job. And the one, say, anecdote I can tell today is that they are very responsive to my persuasion. Okay? The threat of not getting married, or the threat of having a wrong kind of husband sounds very real to their ears. Okay. So I think in the past, Japanese husbands have been too nice to their wives. That might be one of the reasons why my students want to follow the path of their mothers. But in the future, Japanese husbands may or may not be as nice as they were. Okay. This is a message I want to convey to my students. And another message I want to convey to my students is that they are going to live until their 90s. Okay. And my message about their future is primarily that, hey, you are going to have to work and support yourself for 50 years to come until they are 7-year-old, because my students are in their late teenage. It's 50 years. 50 years ago, okay, it was 1964. Okay. Oh, we had Tokyo Olympic Games. Right? Okay. It was the first year. It was the year that the bullet train was first completed between Tokyo and Osaka. But in that year, there was no highway between Tokyo and Osaka. For the trucks carrying their load, carrying some stuff, left Tokyo, I'd say 5:50 in the afternoon. Maybe they reach somewhere beyond Yokohama I'd say 8 o'clock, and they got to Nagoya, say 5 a.m., and maybe 11:30 in the morning at Osaka. Okay. That was Japan 50 years ago. And 50 years ago, Americans are fighting in Vietnam. Okay, and my house has no air conditioner, no fan, nothing. So that's 50 years. And my students have to work for 50 years. They have to stay in the workforce. They have to be wanted for the coming 50 years by somebody, by the future employers. So for this to be possible, they have to be educated now as well as in the future. So this is one of the thing that's a very structural thing. But unless Japanese women have learned, unless they have some idea that their life is going to be very different from their mothers, and theirs will be partly working and partly learning for the coming half a century. This is if this is completed, half of the say concern that Mr. Paulsen showed us will be gone, and probably the glass will be 7 layers filled. Thank you very much.
Well, thank you very much, Mr. Tamaki. As a wrong kind of husband, I'm so relieved that my wife is not here today. And anybody needs their 7th inning stretch now, please do so now. I feel like having one, but please bear with me another 10 minutes, 10 or 15 minutes. I'm going to try to give you my perspective from the private equity perspective. My name is Osamu Yamamoto. I'm a partner at Unison Capital, which is a private equity firm based in Tokyo. In my opening remarks regarding the key theme that Alicia proposed, mine is inevitably through the lens of private equity. So first, what does private equity firm do? Good? Oh. Okay. Yeah, there's an English version, so you can have it later. Let me use this one, Japanese version anyway. Private equity firm, if I may borrow the expression from Tamaki-san's presentation, playing a role of a financial intermediary. The financial intermediary, bridging investors and investees. And the kind of investors who wants to have a higher return compared to the public equity alternatives. Investees who wants to have a risk capital with corporate governance service. I can come back to this later, but this is a kind of financial intermediary role that private equity firm is performing. Then why is private equity is so popular amongst the international investor? This is a chart that explains you why. This is really a work done by U.S. academia. They actually analyzed 598 private equity funds over the time period of 1984 to 2008, and these are, as you can see, it's complicated, but it is a clear evidence that the private equity has been performing or creating alpha over public equity. That is why the public equity, compared to the public equity, private equity is now becoming so popular amongst the global investor. Then, getting into today's main topic, where really is risk capital in Japan. My proposal today is to create the world's largest and influential private equity investor in Japan. You can do that, and I'm going to tell you how, but let me give you first the overview of the risk capital situation today in Japan. This is a framework for the public equity. As you can see, risk money resides in many of the investors, like in the public sector, there are pension funds, quasi-public money, and for the private sector, there are corporate pensions, insurance company, and banks. And in the middle, there are fiduciaries, and that risk capital intermediated by the fiduciaries and goes into public companies. Now, the private equity picture is the same, but a little bit complicated compared to the public sector alternative. Private equity the source of the risk capital is the same. We potentially have a public sector pension fund like a GPIF, quasi-public money. And also from a domestic side, we have corporate pensions, insurance companies, and banks, etc. And to Shiozaki-san's point, we now have regional banks into this whole picture. And intermediaries, funds. There are two types of funds in Japan now. There are government-led funds or a coming fund, and private funds like us. The functionality of those two are the same. They get the money from their investors, and they are supposed to put those risk capital into their choice of projects. In many of the cases, their choice of the projects are venture companies. In our case, a Japanese mid-cap corporation, and some will choose infrastructure investment. The others might choose real estate development. But like Tamaki-san also so rightly put, private equity needs a lot of information production. You can just go to the exchange and buy the share. You really cannot do that for the private equity. It takes skills of the GPs. But now, let me give you the size of it. This is the Japanese risk capital situation. This is a stock figure. Right-hand side is the capitalization of the public corporation in Japan as of December 2013. It's close to 4.7 trillion US dollar. And I guesstimated the same figure for the private equity. It's 0.01 trillion US dollar, or 477 兆円 for public equity, and 1兆円, just 1兆円 for private equity. And the total risk capital amounts to 478兆円, or 4.78 trillion US dollar. This is the same picture for the global situation. Actually, there are 64 trillion US dollar equivalent of the capitalization of all the public companies globally. And we have $2.4 trillion, or 240兆円 equivalent of the private equity globally. So this is 4% of the total risk capital. Again, this is a stock figure. And here in Japan, private equity is just 0.2% of the total risk capital. So this is why the policymakers of Japan are so keen to increase the risk capital flow into the largely defined private equity arena. In order to do that, there are two policy actions. One is to create LPs or investors, influential private equity investor in Japan. How? You can reform public and quasi-public money reform to do that. And second option is to create so-called government-led GPs or coming fund. Right now, policymakers in Japan is now focusing more on this option 2, but my point here is option 1 is far better. Why? In the course of doing these kind of actions, there are 3 potential policy objectives. One is increasing the risk flow of the risk capital. Second is enhancing the corporate governance practice. And third is enhancing the returns of the public pension. In option 1, which is creating the largest influential LPs of the private equity in Japan, you can do number 2 and number 3 pretty much. Because I can tell as a private equity practitioner, LPs are the good LPs, are the cradle of animal spirits of the GPs like us. LPs are the source of risk capital as well as the source of corporate governance to us. So if you want to have a good GPs in Japan, First, you got to have a very good LPs or very good investors in Japan, not the other way around. So that is why I am strongly recommending the option 1 over option 2. So now the best part of my presentation, I have 5 minutes left, I believe. Now I am going to tell you how to create the world's largest, yet most respected private equity investor in Japan. This is the example that from Shibata-san's presentation. This is a lesson learned from Canada. This is Canada's situation. Canada CPP, or Canada Pension Plan, is equivalent of our Kosenenkin, or second step of our whole pension system. It's exactly the equivalent of a Kosenenkin. And a CPPIB is equivalent of GPIF. And back in 2000, CPPIB only invests in fixed income. As you can see on the right-hand side of the bar, 94% of the CPPIB money went to fixed income, period. In 2013, fixed income just consists of 33%, and 50% goes to equity, and I can come back to later, and 70% infrastructure or real assets. See, during the 13 time period, the matter of 13 years, they changed dramatically the portfolio makeup of CPPIB. And for the 50%, the equity portion, 64% is a public equity, and 36% is private equity. That is why right now, CPPIB from the practitioner like us is a dream investor. We need CPPIB money because they are very wise and they are very, very, very strict to the things that we do, but yet we all know that that is a source of our governance and also source of the right kind of risk money. CPPIB is a respected name. And this is the CPPIB's performance over the last 10 years. Their nominal return over the 10 years' time is 7.4%, and the inflation-adjusted real return is 5.5%, which is over 5% their real target that the auditor of the pension system is requiring CPPIB. The rate that they are required is 5% real return. So this is good. This is GPIF's portfolio makeup, as many of you know. And Shiozaki-sensei and Shibata-san and Tamaki-san already covered this. But this, right now, fixed income composed of 66%, and equity, both domestic and overseas, 32.4%. There is a reason. This is a legislation. You do not have that much of the latitude right now. But like Adam said, any policy action is possible, but the ambition required. So here I'm proposing the ambitious policy action to make GPIF, making them into the world's largest and yet most influential private equity investor. And by the way, this is the, as you many of you know, the performance of GPIF over the since its inception. The nominal return is 1.54%, and as everybody knows, we are in the deflationary period then. So the real return is 2.04%. Lessons learned from a CPPIB reform, 4 points. You got to have a public consensus to make this kind of thing. Like you said, it's ambition, and ambition should be shared amongst all the Japanese citizens. See, Canada did that. They actually changed the legislation back in '97, but before that, they spent the whole year debating whether they should or they should not change CPPIB's asset management. Second, and they said yes. The Canadian public says yes, absolutely. Then after that, they changed the legislation so that you cannot really go back. the latter. And how strict this is, it is, if you want to change the CPPIB Act of 97, you have to go through the same kind of procedure like you changed Canadian Constitution. The procedure that they embedded into the CPPIB reform is that rigid, and that's another lesson learned. So if we want to change the GPIF legislation, we should do something like that so that we cannot go back in any way. And third, and foremost, CPPIB has been telling us they are the state of the art. Where? In the governance of themselves. They are getting huge pressure for the Canadian people. And their legislation requires the CPPIB to be transparent and accountable. And right now, CEO of CPPIB is a very great friend of mine, ours, in the industry. His name is Mark Wiseman. He used to be the private equity head of Ontario Teachers. He was recruited by the board of CPPIB, but the board of which consists of 12 Canadian people. They are appointed by the Canadian government. So the governance mechanism of CPPIB is somewhat in line with Ito Sensei's proposal in the last panel, final report released in November of 2013. And lastly, and not least, you got to give them the world-class incentives to form the best team. Tamaki-san covered how many people they have at the GPIF right at this moment. CPPIB now have 838 people in Toronto, Hong Kong, and London. And we are treated from a Hong Kong-based team, and they are very good. Why? Because they are getting a huge pressure by themselves, and they know exactly how corporate governance and the governance mechanism works. And this chart, I'm just skip it. Everybody knows how big the GPIF is. And the CPPIB here is, just 18 trillion yen. And 18 trillion is the same size of Chikyoren in Japan. So you really can do this. So GPIF with, total asset size of 120 trillion or 130 trillion, it's far larger than CPPIB. So if you are ambitious enough, and we have successfully, coming up with a consensus among us, we can actually change the game, and we can create the world's most largest and influential private equity investor in Japan. This is a kind of scenario that excites me, really. Like Shibatsu-san pointed out, how many of CEOs of US companies or European companies coming to Japan to explain what they are thinking? Virtually zero, because we do not have good investors here in Japan. And if we have, this kind of, influential investor, the chances are they are coming to us. And also, the good investment proposal will be flowing into Tokyo constantly. That is a scenario that I am envisaging, and that excites me. So let me finish. I'm over time, so let me finish my opening remarks by asking you kind of a black and white kind of question. Which is more likely, those two situations? One is that left-hand side says CPPIB is taking way too risk compared to its, given its long-term mission. And their state-of-the-art, so-called state-of-the-art portfolio management scheme is fake. And from the viewpoint of finance, modern finance and practice, modern finance theory and practice. Right-hand side says GPIF is taking too little risk, given its long-term mission. Their asset management skill is, and the framework is somewhat obsolete from the viewpoint of modern finance theory and practice, and therefore there is a huge opportunity cost embedded among all of us, to the Japanese citizen. So I leave that to you, and this is my, I stop here, and I am looking forward to the further discussion. Thank you.
Thank you very much to all the panelists. I had no idea when I proposed this topic that it was going to be quite so wide-ranging. And so just for the sake of opening up to questions, I want to reiterate a couple of the suggestions that I heard from each of the speakers. So Shibata-san talked about the need to reform the personal guarantee system and to change the put option, which is in Japanese venture capital industry. And he talked about the three big pillars of risk capital in Japan: the pension funds, personal financial assets, and the currency reserves, which I thought was an interesting topic. Shiozaki-sensei, for me, the most interesting points you raised were about the need for better corporate governance on corporates, but also stewardship on the investors in those corporates. And so those two things form a virtuous circle. And I'm going to come back to Tamaki-sensei, but that also echoed, I thought, what Yamamoto-san was saying, that you need good GPs with properly trained, properly compensated people, but you need good LPs to keep the pressure on those good GPs and to create a good outcome. I thought Tamaki-sensei's main message was that we have to support women and teach women how to take more informed risk with their own human capital to avoid the divorces, to avoid the bad husbands, and that we should be careful about using GPIF's money for short-term purposes. But again, I think each one of the panelists made a point about GPIF should be used for long-term results to support the pensioners of the country. So I'd like to open it up to questions. I have my first question ready if people are too shy, but please, is there anybody who's willing to start off? Sano-san, my friend Sano-san, my friend and old colleague.
Thank you, Alicia.
Could you state for everybody else who doesn't know who you are?
Okay, thank you, Alicia. It's really good to hear you. So impressive today. And I'm Sano, and I'm a representative of Dalton Investment, who is the U.S. financial institutions putting some money in Japan. And my question is sticking on to GPIF. Maybe Representative Shiozaki-sensei will answer, or Tamaki-san maybe. And the daily basis, I've been doing conversation with my clients and my partners overseas, and they're really looking for when the GPIF is going to change. And they, for the first time, say when it was announced 2 or 3 months ago, and they start saying again, Sano-san, it's really a kind of a PK operation in the market. PK means no penalty kick. It's a price keeping operation again. And however, it changed quite a lot. Say GPIF start changing, selecting the managers. However, my question, which is collected from my clients, is GPIF can bear the, say, Shibata-san, you mentioned personal guarantee and job description. So are they ready to take that kind of the risk profile of expansion of taking risk in their portfolio, say, based on like public servants, like incentives? That's my question. So infrastructure is really important rather than proceeding the project or any other other deals.
Yeah, I would like to offer anybody who wants to answer the question, but of course we have Ito-sensei here, who is the leader of the debate, but I think it's a kind of a, he cannot be the monopolizer of the whole conference. So I think you should approach him afterwards, but let's hear what our panelists have to say. So the question is, are the new people at the investment committee ready to make recommendations for GPIF?
I think I would be very brief. Before we talk about the governance of GPIF, we need to define what it is, and also what is the goal that the GPIF needs to achieve. And even with the extensive effort by Professor Ito, this part was left blank. And when you take a look, the governance structure of GPIF, it's a board of directors reporting to the president. It's upside down. And it is also investment committees making commentaries, not decisions. So the president of GPIF is the last job that you want to accept because you're the only one, apart from the minister, in charge of the account. So after defining the role of GPIF, after defining the goal of performance, and after having a proper corporate governance structure, like the one you'd find anywhere in the world, where president report to the board, and where investment committee makes actual decisions, and then management of GPIF can go over the job of recruiting top-notch talent. It is not that you have to match compensation with the private sector individuals, because there is a prestige, and also there's a sense of serving the public interest. So you don't really have to sort of match sort of dollar for dollar, but at least you need to be able to pay 60% of market rate.
Well, I think Ito Sensei laid out at least the solution to change GPIF. And politically, I would say the Prime Minister's office is already moving forward to change the asset allocation by choosing the right persons on the committee. But the organizational style is still very old, bureaucratic, and Mitani-san is the only person who is responsible for the whole everything, and that won't work. And that's why Ito Sensei proposed to have asset allocation reform and governance reform must go hand in hand. And for the moment, we are having problems convincing bureaucrats and to come up with the right solution for governance reform by introducing legislation to have totally different type of organization that would bring fair independence for the GPIF, or new GPIF, I would say, from the politics or bureaucracy or whatever, not to be that means of PKO. So I think I'm going to have a series of discussion with the head of Pension Bureau in Ministry of Health and Welfare and Labor, maybe over coming a few days, in order to agree on what we are going to do with the governance reform also that would ensure the asset allocation reform also.
Yeah, if I can make one quick comment. Yamamoto-san made one comment that I liked very much. He said, you need big ambition to make these kind of reforms, but the ambition must be shared. And I think that you and Ito Sensei and everybody who is involved in this reform, you have a very difficult job to convince the people involved that this is a worthy ambition, that this makes sense for everybody. So thank you for your efforts.
Okay, I have also my own ambition. My ambition is to carry the workable and reliable public pension system into the 22nd century. And but to do it, okay, we need a working generation to support the retired generation. That's one issue. But institutionally and legally and politically, we need to have workable and reliable the pension system which people trust. And for this, today GPIF and the new GPIF will be a part of the public pension system. And because each, as I said in my comment, each single yen that GPIF manages is pension money. NBIM of Norway, Norwegian Investment Management, their money comes from the under the seabed. It's oil money. Okay, so money comes from many places, and in Japan, money comes from people's pocket as a pension contribution. And this country is a democracy. And for the pension system to be carried into 22nd and 23rd century, people must maintain their trust in the government and in the pension system. Thank you.
Just a quick comment. I don't think GPIF now, the current GPIF isn't ready to make that dramatic change in the portfolio complex. But, you know, I talked about the CPPIB reform. It takes actually 10 years. And if you are to into GPIF reform, I think it takes 10 years as well. Starting from the the consensus building, coming up with the right legislation framework, then coming up with the right governance mechanism. Then after that, only after that, we can come up with a good team. And, you know, it takes 10 years, but, you know, why not? I'm age of 50, and I will be 60, and my son is now 20, and he will be 30. And if we can get that kind of a, dream scenario in 10 years, I am eager to have that kind of scenario. So that's my quick comment to Mitani-san's point.
Thank you, Paul Sheard, Standard & Poor's. Alicia, can I just maybe shift away from the GPIF? I think we could spend the whole afternoon, and it's a fascinating topic. But I was struck listening to Shibata-san and then Shiozaki-san. The following kind of thought came to mind. It feels a little bit like being in a time warp or a déjà vu for somebody who lived in Japan for 17 years, and now I've been out for 8 years. But Shibata-san just listed some jotted down his comments, some really great ideas, and sort of they sounded like no-brainer kind of things. Wow, I didn't realize that. Well, gee, can't we fix that? And then Shiozaki-san sort of listed a great long list of initiatives and ideas that are coming out of the LDP. And we've seen this pattern, it seems to me, in Japan for many, many years of people sort of throwing up, look, we could fix this and this and this and this, and then the politicians, very eager and very diligent, sort of working on these schemes. But actually, we don't seem to solve these problems. Now, the normal reason for that would be there's vested interests and you just can't do it kind of thing. But aren't there a number of sort of solutions here, ideas, that people like Shibata-san suggest it, and people like Shiozaki-san say, great idea, let's do it. So what are the blockages in the system?
I want to add a question on to that, because I think Shibata-san said something that relates to your question. That's a very, 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 very important concept. And Shibata-san said we have to reduce the penalty for failure. Right? We have to give people the chance to start again. I don't know what kind of legislation you can pass to change this, but we have the world's greatest example in Prime Minister Abe himself, that he himself has shown. It's not funny, it's the truth, right? That he has created a new beginning for himself, and he is a great example to all of us, including Japanese business. So can we try to answer Paul's question? We have all these good suggestions. What do we need to make them become a reality?
Sticking to this venture capitalist question, it's very easy. All you need is to have a proper venture capitalist industry. And the only reason why we do not really have a Western-style venture capitalist industry is asset allocation of Japanese pension. It's as simple as that. And also, things such as, private equity funds, again, the same. If you do recall, days in which LTCB went bust, and it was Japanese taxpayers who bailed LTCB out, and then it was Ripple and the Chris Farmer's partnership that bought LTCB on the cheap and made tons of money, at least in the first round. And the Japanese people didn't like it, but they have a reason to blame themselves. Why? Japan did not really have a pension allocating its money to private equity firms in the first place. And if the money comes from Japanese pensioners, it's a Japanese taxpayers' money that is used to turn the LTCB around, and it should have been Japanese pension contributors' money that should benefit from the investment. So again, it's essentially something that we should be criticizing ourselves. But vis-a-vis venture capitalists, the only thing is to have a proper asset allocation to various classes of assets, ranging from fixed income through public equity, through to private equity and the venture capitalists. Lending practices, it's going to take a long time. But at the same time, this country needs a non-recourse funding culture with non-recourse pricing that the bankers can charge. And I don't know how to get there.
In terms of policy making to achieve whatever you want to achieve, I have experiences of success in policy making when we have good combination of bureaucrats plus politicians in a good sense, I would say. Oftentimes, in the bureaucracy, always there are those who are inclined to protect the values, old values and organization. But there are always some fair number of reformists in the bureaucracy also. And they're the ones who know much better than we do, politicians. And good combination comes out from the reformist bureaucrats plus reformist politicians with probably from private sector good idea. And these combination should be realized, and in order to raise the probability of achieving it, I thought the civil servants personnel management, reform is crucially important. And also, if you focus on human beings, I think university reform that I just touched upon is, again, crucially important. And in Japan, I think, of course, universities are changing, in a positive way. But as industry, I think we are not winners. And we have to admit that American universities are much more efficient and attractive and strategic, I guess. And in order to bring our universities more sexy, that's why we're trying to go through so-called university governance reform, where presidents or president's initiative can really achieve whatever they want to achieve.
I think we have I work for a very strict timekeeper. We have 3 minutes left, so please, Tamaki-san and Yamamoto-san, I'm sure you have some comment you'd like to make.
Well, if I may add a short comment to the future of GPIF, my comment is primarily about sophistication as a long-term investor of the GPIF. Long-term is something I stressed, I emphasize. And long-term means, long-term sophistication means accumulation of human resources there, as well as institutional culture there. As Shibata-san pointed out, we will need to pay the private sector salary. We can't, and we don't need to pay. As he correctly pointed out, the GPIF can provide the future staff with a sense of public duty, satisfaction, working for that. And also, I have talked with a visitor from a major Canadian pension fund, and we discussed the issue of about recruitment, and they are getting slightly less than the private sector. But what's compensated for the reduction is the satisfaction as a public working for public sector public purposes, as well as the project itself, which is not possible to get involved in the private sector. So I think in this regard, GPIF has a good chance of becoming a long-term, more sophisticated investor. Thank you.
I just want to make my points about the importance of the patients. Well, many of the national agenda that Shiozaki Sensei laid out so kindly today takes time. And I used to be the soccer player. And when I played it in my high school team, that was a joke that the Japanese football team made a World Cup. But before '98, everybody, let me remind you, Japanese national soccer team never made it to World Cup. But after '98, they are making 4 consecutive times. And this time in Brazil, they may come into the really, a round of 16s or more. And it takes 20 years. And for this, I give full credit to JFA, or Japan Football Association. They had a long-term view, ambition. They have a very good governance, and they have a very good team, and the incentive mechanism too. So I'd like to draw this example to the real-world economy. And if you are patient enough, wait for 20 years. And you might well be having the world's best soccer team. Thank you.
I think that's a very nice and positive note to end on. I hope you'll join me in thanking all of our panelists. And when you leave here, I hope you'll be encouraged to take more risk.